All right, guys, back to work here tonight. Hope you guys had a fantastic day. Hope you made some money out there, but it's time to get back to work. It's Tuesday evening. We're getting ready for Wednesday, not just any Wednesday, right? FOMC coming at us tomorrow morning. We have a lot to cover in a very important video newsletter, and as always, I'm going to put together all my favorite trades for tomorrow that we get a game plan to make some money on the FOMC announcement tomorrow morning. Before we get this party going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And as always, I appreciate you guys tuning in. If you enjoyed the video tonight, do me a favor, hit that like button, give me a holler out in the comment section. Really appreciate you guys tuning in and supporting this YouTube channel. But enough of the intro, Joe. Let's get ready for Wednesday FOMC. Get some big news. We got some earnings coming out tomorrow. Boy, oh boy, going to be a busy video here for tonight. Now, everything bullish. What a difference a day makes, right? Bullish on the S&P, bullish on the Nasdaq, bullish, of course, on the crude oil. The S&P and the Nasdaq are pretty straightforward, right? We're looking for pullbacks, but you know what you'll see here on the S&P and the Nasdaq is there's quite a few different possible variations of pullback areas. I have 4 different pullback setups that I'm watching for tomorrow. You know, it's always a bit difficult to kind of predict where the perfect entry will be. So rather than make predictions, I want to make sure you've got 4 of my favorite kind of pullback entries we'll talk about. That way, no matter what the market gives us, you get a roadmap to make some money on it. We'll also talk about some reversals. We get a lot of news coming out tomorrow as well. So if we learned one thing from today's reversal, right, we definitely know we better be ready for potential reversals back down again. So we'll talk about the buy side for sure, and we'll definitely talk about the sell side as well. We'll get a good roadmap to make some money on the S&P and the Nasdaq. Oil looks a little bit confused right now. We got some red flags on oil. We're definitely bullish on the oil right now, but you can see right there, right? Buyers trying once, buyers trying twice. I've got my eyes on some breakouts for sure going higher. I've also got my eyes on some deep pullbacks, maybe some bear traps, and possibly some reversals as well. Got a busy schedule for oil traders tomorrow, so you want to make sure you watch all the way to the end. Now, of course, speaking of tomorrow, tomorrow's not your, no, it's not your average Wednesday. There are really 3 things that you want to kind of keep on your radar here for tomorrow. First, of course, is we've got the big block of news at 10 o'clock Eastern Time. The ISM manufacturing and the JOLTS report are pretty much the big news reports we have for 2 of the 3 markets. We, of course, have the weekly inventory report at 10:30 on crude oil. But for most of us on the S&P and the Nasdaq, the ISM manufacturing, that's the big news of the morning. And, of course, the JOLTS report at 10 o'clock. They're both at 10 o'clock, so you definitely want to be aware. We call it the 10 o'clock shock in our trade room. Boy, I'll tell you, if it's half as jumpy as that ECI that we saw this morning, what a reaction, that ECI. Anyways, 10 o'clock tomorrow, ISM, JOLTS report, that's the big news of the morning. That's the first thing that you want to think about for tomorrow. And of course, we all know tomorrow is one of the most highly anticipated FOMC days, possibly of the year. They're anticipating only a 1/4 point rate hike tomorrow. Will they be more? Will they be less? It's tough to tell. My job, my kind of game plan on the FOMC announcement is I don't trade the afternoon session on Fed Day because it's just so jumpy, it's so illiquid, it's so inconsistent. My game plan on a Fed Day is to get into good trades early. I can certainly leave a position open as a runner into the afternoon, but my goal is always to get into a good trade as early as I can, leave a runner, see how far things will go into lunch, into the afternoon, but really try to resist the temptation to gamble around the FOMC announcement just because, again, there's no liquidity. It's very violent. You can lose a lot of money in a short period of time. But then I always get excited about coming back that Thursday. The Thursday afterwards is what I call Reaction Thursday. Remember, a lot of professional traders, myself included, a lot of the big money players are not going to wrestle with the FOMC announcement. too volatile, too inconsistent, too illiquid. So what they'll do is they'll save their bullets and come back for reaction Thursday. The Thursday following FOMC announcement is oftentimes much easier than trying to jump on the back of that, that rodeo, right, on Thursday afternoon. That is the second piece of the puzzle for tomorrow. And then once again, don't forget, third piece of the puzzle for tomorrow is the earnings. We continue to see some very big, well-known company earnings, right? We've got, of course, some big names here, right? Some big names after the close tomorrow. Once again, as we continue to repeat on this video newsletter, remember, we know when the news is. It's before the open, it's after the close, which means be careful outside of normal trading hours. And also, don't overthink this stuff. Don't trade the news so much, right? We trade the reaction to it. So try not to waste too much of your time. As I've been kind of preaching over and over again the last few weeks on this video, I will spend zero time tomorrow looking at what the news events actually are or what the actual numbers are tomorrow. All I care about is the chart in front of me. It doesn't need to be very complicated, and we'll talk about the charts here tonight. So be aware of the earnings before the open, after the close. Trade the regular session, right, if you can. And again, 10 o'clock is the big news for tomorrow. And again, get into those trades as early as you can. Tomorrow morning, we'll try our best. Into stuff early, leave the runner. But again, get to batten down the hatches, right? Buckle up in the afternoon. And again, save those bullets. Save those bullets for reaction Thursday. All right, back to our charts here, guys. Now, if you like making money on your account, I would say watch this video all the way to the end tonight because I'm going to cover all my favorite trades on each one of these markets. And remember, every trade I talk about can be applied to your market. So if you love the S&P, I'm going to talk about setups on the oil and vice versa, right? So don't just click off after your favorite market. Make sure you watch all the way to the end because I will talk about different trade ideas that apply directly to your favorite market. So I'll give you reason to stick around all the way to the end. Let's go S&P first. We'll go Nasdaq, right? And we'll wrap things up tonight on the crude oil. And again, everything we talk about on these videos tonight can directly be applied to your favorite market. Now, real quickly here, this is the 8,000 tick chart, upper left-hand corner, right? These are all going to be tick charts. So be aware of that. You can see the time frames in the upper left-hand corner. That is the 21 EMA, right? 21 EMA. And also be aware too, like always, I'm going to add some additional slower time frames, some 60-minute charts, because I'm going to talk a lot about the directional bias tonight, and I want you guys to have some more chart time frames to look at. I'm going to put all those in the description of the YouTube video, so they'll make a great kind of a great partner, right, along with these, or companion, right, with this chart here for tonight. So grab those additional time frames in the description, and let's get into it here right now. What's the most important factor here that we're seeing on the S&P right now? We have an overall bull bias. Last night on the video, I was talking about how we were leaning right towards the bear bias. We're mixed, right, in last night's video. Well, yeah, that definitely confirmed that this is nothing more. Well, pretty much, right? That snap up off that ECI number this morning pretty much made it difficult to short anything here today. We're definitely a bull bias right now. Bull bias is the lens I'll be looking for or looking through this chart here tonight. And really, for the most part, the most important thing right now is it's a very strong move higher. Anytime we see a strong move in one direction, we're expecting a pullback and a retest of that high. Once we get the retest of the high, do we keep going with a breakout going higher, or do we get a possible reversal off of that high? We'll talk about those trades, of course, as we go deeper into this video right now. I mentioned in the introduction, there are 4 different ways we can trade the pullback on a market like this. And let's talk about those right now. And of course, I'm going to talk about if the market goes higher here as we go deeper into this video, because we may just keep on going higher. We've got some big levels overhead at 41.09 and a quarter. Let's talk about those 4 different types of pullbacks. That way you've got a game plan to make some money on them. The first one is a shallow pullback. Now remember, it's a very big move, very strong move. We would expect the buyers would like to buy nice and low, right? I definitely have some areas I'm watching. However, whenever we get these really strong trends like this, sometimes we don't get a deep pullback. Therefore, we want to make sure we're ready for shallow pullbacks, right? In all reality, this could be a smaller channel, right? We may see entries off the low of that smaller channel. What's the problem though with buying a shallow pullback? You're buying relatively high. So the best way you want to buy a shallow pullback is to let the bears try to short this thing, right, off the highs. Let them try once, let them try twice, and I want to buy as low as I can. So I'm trying to buy with what would be a bear trap, right, or a two-try failure pattern like we talk about in our free trading course. So if all we get is a really shallow pullback, again, I can easily see how that could be a tighter channel right there. Remember, if you're buying relatively high, you want to buy low with some sort of trap setup, just what we talk about in the free trading course. Now, if we get what we hope we get, right? What I would love to get for tomorrow is a much deeper pullback into the low of that channel. And then from there, we ultimately now want to try to trap in some of the bears and use their stops as fuel. We talk a lot about this in the free trading course. Pull back, get underneath the 21 moving average. Can we get some bears coming in, try to short this thing? And once they short, right? Once they get short, then we think about, okay, where are their stops? Remember, a strong move higher like this wants to go back and retest that high. If I can trap in those bears, use their stops as fuel, I can use my failure into pullback combination, right? That failure into pullback combo. The same setup we talk about in the free trading course, right? Again, off the low of that channel. Now, what we really almost want, right? What would be even better on this would be if we got a really sharp pullback. Now, if we see a really sharp pullback, what's the problem with a real sharp pullback? Momentum. Anytime we see a strong move down, we have to kind of anticipate potentially another leg lower, right? Anytime we see a strong move, we expect a retest. So I love the idea of a deep pullback. Because why? Because that gives me a chance to risk small to earn large. But with that great risk reward, you pay a price. And that price is momentum. So in this situation, the third pullback you want to look for is if it's a really deep pullback, really sharp pullback, would not surprise me whatsoever. And you almost want to hope for this, right? Because this gives you that huge potential reward going higher. How do you make money in this one? You let the bears try twice, right? Let them try once, let them try twice, trap in those bears, and again, use their stops as fuel for the run back up to retest the high. Once you see that juicy signal and stops get triggered, now, a lot of times on these ones, you're not going to get that failure into pullback pattern combination we talk about in the free trading course. I would love to get a failure into pullback combo, but most of the time when you trap in those bears like this thing's going to spit running higher, and the only real option you'll get is a really shallow pullback with what? With a trap setup before we go back and retest the high. I mean, in all reality, this is kind of the dream come true, right? Deep pullback, trap in some of the bears. We're overall bullish on the 60-minute, right? So we're going with that overall bull bias, trapping those bears, let them try twice, buy right into those stops. And remember, they want to go back to retest the high. Before we retest the high, we get that, again, another trap setup, right? So as you can see, I really enjoy traps, and I love using failures on the other side of the moving average whenever we have a nice, strong trend. The same stuff we talk about in the free trading course, which reminds me, by the way, I know that most of you guys and gals watching tonight have learned things like failures, pullback combinations, and trap setups. But listen, if you're here for the first time right now, if you're one of the few folks who haven't taken the free trading course, I'll put a little link up there for you in the upper right hand corner. Grab that link, take the free trading class, because the strategy that I teach in that video series will teach you a stupidly simple trick to know where the best winning trades will be each day, and I'll give you 4 different entry patterns to help you make money on your own account. If you're tired of missing the best trades each day, or you're not getting the results you want right now, if you want a better roadmap to follow, grab that link, take that free course. It's perfect for someone trying to make a living right out of this great business we call day trading, right? So grab that link, get registered. And again, I'll put more links, more important links down in the description of the YouTube video. Now, I promised you guys 4 different pullback patterns. I've talked about 3 so far. What's the 4th one? The 4th one is the V bottom. Now, we may see something that really shoots lower, but because buyers want to buy low, it may just whoop and run right back up. These are always difficult, right? Because you're not going to get a chance, you won't get a chance in this scenario to trap in those bears and use their stops as fuel, right? The easiest money you're going to make in a trending market is trapping the bears, in this case, below the moving average. But if you don't get that, right, how do we trade this? Oftentimes what happens is it'll V bottom and begin to grind. When that happens, where's the objective? The objective is to get back to retest the high. We don't want to chase it as it goes higher because now you're buying high, right? You're killing your risk-reward ratio. What do? You draw a trend line off that high, you bring it down, you find a new channel off that low, and then remember, we always say, right? Look left, find some prior swings, and look for that first test off the low of that channel. Now remember, you want this entry, you want that entry before we go back and retest that high, right? Really, really important we get the entry before we retest the high. I know, I'd love to get in down here, but when it just rifles lower and then jackknifes off that low, what we want to do is we want to focus on finding that new channel off the highs and then buy that first test off the low. And this could be a bear trap, like I'm showing you in this example. It could be a seller failure where it gets underneath the 21 moving average, right? Bears come in, try to short this thing. Stops get used now as fuel. So really any of the setups you guys are learning in the free trading course can be used on that 4th, and not as desirable, but sometimes the only option that we get. Now, one more question I'm sure you're wondering right now is how do we know when a pullback turns into a reversal? The most common type of reversal in a real strong trend like this is a deep pullback. They pull back to our 21 moving average, but in this case, the bears don't try and fail. No, right? They try and they hold, right? And they jump off of that moving average. Whenever we get, remember, what do we call these? We call these 1, 2, 3 reversals. Now, I can't sell that first pullback, right? Because we're too bullish overall and we're too bullish on the chart in front of you. But if the bears can get something going, right? If they can rip this thing and really jump off that moving average, now we have a reversal, right? Wouldn't totally shock me because, again, we got a bunch of news, Fed day tomorrow. Markets, as I mentioned last night, are going to be a little bit more difficult to pin down this week because of the end of the month volatility, the FOMC tomorrow, big earnings reports. We talked about this in last night's video. If I can get this 1, 2 jump, right, running lower, remember, very, very strong run lower, then what do? We mark off that low. We mark off that high and we focus on selling, in this case, that first test off the channel. Now, of course, I'm keeping it simple, right? I'm kind of demonstrating a bull trap on this one. It could be a trap. It could be a buyer failure. It could be a pullback combo, a strength move going lower. And where do you think the market wants to go at this point if they get the reversal? They're going to want to go back and take out that low. In my trade room, I always tell my students, use the first leg as the measuring leg. So the first leg down, right? We'll know more of this tomorrow once we get there. But that first leg, once we know where that first test, that channel is, that becomes the third leg, and that will help you squeeze out a little more profit as we go, right? Remember, one of the easiest ways to make more money is leaving those runners to really squeeze out or maximize that position. So we know where the market wants to go, but I'll usually, by general rule, use that first leg, third leg, right, as kind of my objective on a market that reverses. Be very careful, though, in a situation like this that really jackknifes lower. Because oftentimes these jackknives lower, right? By the time they try and they fail, again, they get to pull back and hold it, right? And roll over. Once they do, now find that low, find that high, and don't miss that channel. For example, today, we saw that big jackknife off that low, right? That ECI number came out and just blew the bears right against the wall there. Once they got that jump, right? Once they started jumping off the moving average this afternoon, now you're going out, finding those highs, finding those lows, right? And grabbing those first tests off those channels. So once they start to jump in the opposite direction, then we go out, we find that channel, and we don't miss that first test. All right, now I think we got this covered here on how to buy the pullback and sell the reversal. But there's a lot more we need to talk about. For example, what if we go higher here? Right? What if we go higher? What if we pull back, retest, then what, right? Then what do we do? And what if we go sideways? Because big news tomorrow. What if we go sideways here? Let's talk about that now on the NASDAQ. Remember, everything we talk about on each of these charts right now can pretty much be applied to whatever your favorite market is. The NASDAQ, you'll notice, is not nearly as aggressively strong as the S&P, but we're still pretty darn bullish. Get a pop and grind channel. Same game plan we just talked about on the S&P can pretty much be applied here to the NASDAQ, right? Would love to get that nice deep pullback, trapping those bears and right back up to retest. But again, right, small channel going higher here. We may only get a very small, short-term little bear trap right off of that low. So just be aware. The same thing I just talked about on the S&P. Now, what if we go higher here, right? What if we keep going? What if the market keeps going higher here? If we keep going higher, you want to think about this as being a little bit too high to buy. And so if we do go higher here, you want to be trying to buy pullbacks. So for example, right, let me get rid of this channel here for a moment. If we were to, for example here, keep going higher here overnight, right? If we keep kind of grinding higher right here overnight, all we'll do is go out and keep that channel adjusting higher, right? Keep finding that bigger channel and wait for that same exact game plan that I mentioned before. I really don't want to buy high as we go higher because we haven't pulled back yet. So as we go higher, there'll be fewer and fewer buyers that want to buy up there, right? The easier money, if we keep going higher here is keep on finding those new channels, mark off that low, right? Remember, ideally wait for that nice deep pullback, trap in the bears with a failure into pullback combo. If it really shoots lower, then it's a 2-try failure. Remember, those deep pullbacks oftentimes result in those little tiny traps before we get back up, right, to retest the high. Again, if you're taking the free trading class right now, you can know what these are, right? Failure pattern, little trap set up as you go back up to retest the high, right? So again, pretty much the same exact game plan I just talked about on the S&P. If we keep going higher here, both on the E-mini and the NASDAQ, we'll keep on watching that channel, right, and keep on looking for that deep pullback. Because again, we haven't seen any pullback yet. We can assume now these buyers will get weary of this, right? NASDAQ has a big objective overhead. So there's no reason why we couldn't keep going higher here, right? NASDAQ had a lot of space up there to reach that big objective at 08.5. I think another thing that we want to be prepared for tomorrow will be a range, right? So, for example, market kind of runs higher here, right? Turns sideways into a trading range. Anytime we have a bullish market that turns sideways into a trading range, how do we trade it? Well, the best trade is always to go out and find levels of support, right, below the range, like prior swings, like trend lines, right? And what we want to do is, once we go sideways in a range, ranges act like magnets. And so with a bull bias on it, all you got to do is, once you find that trading range, wait for a breakout. It's basically a pullback. And the way you want to do it is, at least the way that I do it in my trade room is I wait for bears to come in, let them try to short this thing. And once they try to get that short going, we now know where their stops are, and we can buy into those stops with a classic seller failure pattern in this example. So the minute we start going sideways here, if we do go sideways, again, could be on the S&P as well, right? NASDAQ is what I'm kind of showing here right now. But whenever a bull market goes sideways, right, we then start finding support levels below that range, and we look to use stops as fuel with failure patterns below the low. Now, one fun thing about ranges is that the amount we go below the range is oftentimes the amount we go above the range. So what I'll do is take some profit off at the high of that range and then leave that runner, like I said, right? Tomorrow's a good example of a day where you want to try to get in as early as you can. I'm not a big fan of getting into new entries in the afternoon, but I'll gladly hold on to a position if we have this thing, for example, right, coming or rotating off the low of that trading range. So definitely keep your eyes on a range as we, if we do go sideways on the NASDAQ and the S&P. Last thing I want to kind of point out here is, we talked about, of course, finding the pullbacks, right? Kind of getting those deep pullbacks on this. What would be the best way for us to sell a double top, right? Because that's definitely one way we can sell this market right now. We talked about the breakdown, the hold, right? We talked about that reversal. If I can get that deep pullback, right? Trap in those bears, right? Trap the bears in, back up to retest the high. We have an overall bullish bias right now. And in this particular situation I'm kind of drawing up right now, we're still pretty bullish in the short term. So how would I sell knowing that I'm long-term bullish and very short-term bullish? I'd want to use what we call a crown reversal. These are a little bit tricky, so you want to pay attention to this one. A little more advanced. That's okay, though. I think you can handle it. We go lower, right? We trap in, and we go back to retest the high, right? The assumption is we've now got that long off the low, and we're taking some profit off, right, at the retest of the high. The professional traders, the smart money in the markets, right, they're buying low. They're not buying high. So once we go back up and retest this high, this is where we assume that anyone buying into this high right now is an inexperienced, a rookie trader, small stop, small account, a lot of FOMO, right? So what we want to do is you want to pick that top. Again, we're overall bullish, so I can't be too aggressive. I want the buyers try once, let them try twice, and the ideal entry here is a bull trap off of that high. These are called crown reversal patterns. It's very similar to a two-try failure pattern that we talked about before, right? Deep pullback, 1, 2, back up. The reason why I want a bull trap or a trap above that high is because you have to remember this is an overall bull market. And as we try to go lower, that trend line will be right there. Right? And it's very easy to get in trouble if you're selling too low, right? If you're chasing it as it goes lower, a lot of times these two-try failures, when you're going against the overall directional bias, you're walking right into a trap, right? So if you want to call the top on this, be careful, use that crown reversal, and make sure that when you're getting that signal, make sure you're selling as high as you possibly can. That way, as the market does move in your favor, you've already got that 1-to-1 first target. Your stop's already going down to your point of entry. And if it does come in and rip higher, going with that overall bull bias, you've already got a winner out of it. It might not be the big winner you'd like to get, but at least you're not taking a loss. You're not getting trapped in there at the highs. I hope that makes sense, right? So again, in that scenario, we're going against that momentum. Remember, if we go lower like this, we still have this overall bull bias, right? I don't need to be as patient on the entry because I'm going with the overall trend. When you're trying to go against the trend, you really got to be aware of the opposite side, the with trend traders who are trying to gobble this thing up here as we're going. Hopefully that makes sense, right? And again, don't forget, if you want to learn more about all these entry patterns, right, that link is up there in the upper right-hand corner for that free trading course. All right, so now we know if we go higher, not a lot changes. We're simply buying pullbacks, right? If we go lower, we're trapping in the bears, right, and back up to retest the high, and we'll keep an eye out for those double top reversals if we can get a good sell set up here for tomorrow. Remember, earlier the better, right? Earlier the better on the S&P and the NASDAQ. How about some oil? Oil is probably the most difficult of the charts here for tomorrow. What are the most important things on oil? Well, first of all, don't forget tomorrow we have that weekly inventory report at 10:30, right? Every Wednesday, unless Monday's a holiday, you'll have big news on oil at 10:30. That usually means it's going to be a little more difficult because we have to trade around that news. With that said, though, we definitely have a bull bias on the oil. I would definitely encourage you, look at the 60-minute chart that I put in the description of the YouTube video, and you will notice there's a big juicy range up above us here on the oil. So oil definitely is a bull bias right now, and that will be the lens in which we look at this here tonight. You'll notice, though, the big deal right now on oil is it's a very strong move higher. We separate off the 21 moving average. Anytime we see a strong move, what do we expect? A pullback and a retest of that high. Well, what do we see right now? Well, at this point now, the buyers came in. They tried once to do it. They've now tried twice to do it. And do you see that little crown reversal? It's actually pretty big, right? See how they try once to go higher? They pull back. They try twice. So it looks like right now, and obviously this may change once we open up in Asia, but it looks like right now, if these buyers, if they can't finish off this retest, we might see some bears come in and try to reverse this thing back down again. Now, we're still overall bull bias, right? That's not going to change anything, but that definitely means that we're looking for longs down here, but we got to be a little careful, right? Because now we have apparently a lot more bears in the market than we thought we had before. So most important thing right now is this strong move higher? We should be looking for a retest of that high and potentially a breakout above 293, 80.49, and really kind of the big objective for oil is up around that 82.66 area. I know. I want these prices to be lower as well. But as of right now, though, the chart simply does not tell us we're expecting lower prices. We definitely could change this. It definitely could change tomorrow. But right now, what I know right now. Now, how do we trade the market now going higher? Right at this point now, remember, this could easily happen on the S&P and the Nasdaq too, right? So the S&P, Nasdaq, nice strong bull trend, right? We roll lower, back to retest the high. How do we trade a breakout? Right, and again, this could also apply to the S&P and the Nasdaq. There are, for the most part, there's a lot of breakouts we can use here. There are three basic breakout patterns that you want to look for. One, my favorite, is the pop and grind breakout. And again, all of these can be applied to the S&P and the Nasdaq, right? We pop up, we start grinding. Anytime we see a pop and grind like that, what do? We mark off that high, we mark off that low, we find those prior swings, right? Swings are where traps live. For bear traps in this example, right? Get under the moving average for a failure pattern. Failures lead to pullbacks. Pullbacks lead to strength. The price action cycle, as we talk about in the free trading course. Trap, failure, pullback, strength move. Same stuff you guys learn in the free class, right? And then again, don't forget on these breakouts, first leg is the measuring leg. Third leg, right, that will be symmetrical, and that will give you the information you need to let that trade run and know how far to push it. That's one breakout that could easily happen on the S&P and the Nasdaq as well. The next one is a 1, 2, 3 breakout, right? So we know they're trying to retest the high. They retest the high. They pull back to the 21 moving average. They don't struggle and fail. No, they hold that pullback and they jump off that moving average. Anytime we see those 1, 2, 3 breakaway patterns, we mark off that high, we mark off that low, we drill down, find those prior swings, and grab the entry off of that low. I'm going to keep it simple now, right? You guys don't want to hear me repeat this over and over again, but traps, failures, pullback, strength moves, right? Off the low, first leg, third leg, right? First leg is the measuring leg. Third leg is symmetrical, right? Keep that in mind as well. The next one, the more aggressive breakout we have potentially going higher is if we really blast, right? Really rip, right? Really rip going higher. Repeat after me. Strong move, shallow pullback, higher high in price, traps, baby. This is one of my favorite breakout patterns. On this one, though, you really have to get a real strong pop-up, right? Real strong. That strong pop-up means momentum is strong. We're already going with the overall bull bias in this example. The shallow pullback drives the pullback traders crazy, right? Because you're not going to get a deep pullback to leg it in, right? Then the higher high confirms it's not just a V-top, right? It's not going to come crashing back down again. So strong pop-up, real strong, right? Real strong. Shallow pullback, higher high, that trap, two-try trap, one of my favorite breakouts, right? So pop and grind breakout, 1, 2, 3 breakout, again, two-try trap breakout. There are a few more. We'll cover more of those tomorrow morning in our trade room. We'll cover some more advanced tactics tomorrow morning at the opening bell. Now, as we go lower, right? If we go lower here, what's my big concern? A major failure. Right? A major failure. Now, what might happen is they may open up in Asia, retest, and then back down, right? So we may not get that big crown reversal. But either way, if we end up racing lower here, okay, what's going to happen? We're not bearish yet, but we're not as bullish anymore, right? And that point, this is exactly where a two-try failure comes in play, right? Bears try once, bears try twice. Because again, in this assumption now, right? In this assumption now, we're not as bullish as we were before. We're not quite as bullish. So once they run this thing lower, I would love to get down around this area right there, 77, 73. Now, again, we can rope in those bears with their stops, right? And buy right back up into what will probably become one big trading range. And as I mentioned before, whenever we have a bull market go sideways in a range, what do? We find levels of support below the range. We trap in the bears, use failure patterns, and run those stops to go back up into the range up above us. Now, obviously, if they bring this thing lower, if the moving average comes down and the bears hold this and jump off that moving average, what's that called? Yeah, 1, 2, jump, right? 1, 2, 3 reversal, 1, 2, 3 breakout, mark that low, mark that high, find those swings. Swings are where traps live. My favorite entry is always above a prior swing around the high of that channel. Where do we think the market wants to go? That's easy. It wants to take out that low at 76.55, right? Now, what do you think the odds are we may end up getting that? For example, that 1, 2 blast going lower, we might get that new channel, that retest, and then remember, we're overall bullish, right? So what do you think the odds are we then trap in the bears once, bears twice, and whoop, right back up again, right into that off that low, right? So kind of keep your eyes on that because again, we do have an overall bull bias right now. So we can play, you can definitely play both sides of that coin, right? If you've got that strong push down, if they give you the pullback and they jump going lower, right? Then of course we grab that new channel. We grab that first test as the best test off the high of that channel. They take out these lows. They complete their first leg, third leg objective. But now, right, the rookies come in. They didn't get short at the right spot. They're waiting too late on the move. The rookies come in now and they start loading up at this low. One of my favorite trades in a bull market is take out that low a day, wait for the inexperienced traders to come in, step in, let them load their position up, right? Let those bears just walk right into a trap, right? And again, we're not going to pick that bottom. We'll let the bears kind of wrap that noose around their neck, if you will, and use those stops for that run going higher. Remember, it's all because of that overall bull bias. All right, guys? Boy, a lot of great trades setting up here on oil. Remember, be careful around that 10:30 news tomorrow morning. Will we get that perfect pullback on the Emini or the Nasdaq? Will we go sideways on the S&P, the Nasdaq, or we keep on going higher here and be waiting for that pullback here tomorrow morning? Only time will tell. Don't forget, though, tomorrow morning, 8 o'clock Eastern time, don't be late in the trade room. Get a busy morning tomorrow. I'll put all the membership links, all the free trading class links. I'll put all the info you guys need in the description of the YouTube video. Get to those trades early tomorrow. Be careful in in the afternoon. Save those bullets for Reaction Thursday. And don't forget, if you need any help with anything we talked about tonight, if you want help getting the free course or joining us as a new student, don't be afraid to call the office or use live chat. We're always here to help out every step of the process. All right, guys, hope you learned a bunch here tonight. Hopefully I'll see you tomorrow and we'll trade this stuff together. In the meantime, get some rest, be well, be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.